the online channel is where you started. You were probably India's first digital first emerging brand, competitive brand, so to say. And now you're looking at the offline channels as well. How are you looking at this mix changing going forward? And what are the challenges? Because for online spends, the customer acquisition costs have increased. For offline, you have these big giants who are already, have their ecosystem with the trade, etc. How do you look at this mix go, and what are the challenges that you face?
I think for us as a company, our focus has always been on consumers rather than channels. And you optimize where you can get your consumers from at that stage of life in the brand's journey, right? So for example, for Mamaearth, when we started out, actually the only option that was available for us was online, right? So it wasn't like we chose between online, offline, but of course, sitting at one place, having the ability to serve pan-India, getting the right early adopters, that channel made a lot of sense. Now, as the brand has scaled, what we are following is where is our next set of consumers, right? Offline still continues to be one of the largest channels, right? 85% of the purchases in the category still happen offline. And if the consumers are there, why would you force them to buy into another channel and not the channel of their choice? We as company, as a brand, believe that we need to be available at the right touch points where consumer wants to see us, and that's how the online, offline, or like we say now, the omni-channel strategy that we have is panning out for us. The next level of growth, we very strongly believe, will continue to come from offline because we've just getting started.
So if you could give us a sense of what your current offline reach is and where do you intend to take it, say, a couple of years from now?
So, honestly, it again needs to be seen as a sum of parts, right? Mamaearth is at a level where the next level of growth is coming from offline. And the younger brands are still seeing their growth coming from online because the consumer which we are targeting there, right, is still buying online. Right? So in case of Mamaearth, we are present in more than about 120,000 stores right now, right, with our lead categories. Right? But the universe is far and wide, and we all know that. And we are continuing to double down on executing the strategy that we had put in place, right? And we are very confident that that strategy will continue to bear results for us in terms of driving growth for that brand there. Right?
What are your hero products? I'm sure both of us have used the onion hair shampoo, and we have the Upton face wash. So those two, I presume, would be a large chunk of your revenues?
Yes, for Mamaearth, they are hero products, right? And
how
they
big
continue
would they be,
to grow.
according to you?
Both of them put together would be more than 15%, close to that range of both. So in the tune of 100 crores, right, in terms of individually.
And that's the issue as well, right? Because when you have a hero product which is available online, 95% of the sales of that product by competitors happens offline. You have a Marico, you have a Hindustan Unilever, you have a bunch of startups which are looking at the success of these products, and they've come out with similar products. Yeah. You see multiple options for Uptons and onion hair oil, hair shampoo, everything onion. How do you compete with so many people, the large players and the newly funded, equally aggressive new age players?
Two things. One, I think first mover advantage is rewarded by consumers. The fact that we were the first, we were the ones who have built strongest association with these, right? And consumers do remember us for these ingredients. Two, quality. And I think we do bring a certain level of quality to the table, right, which is differentiated, which is better, and consumers do recognize that, and because of which these products, even after all action that have happened, continue to demonstrate leadership in their ingredient.
You started off as a baby products company, and then you all, evolved, morphed into a larger FMCG giant that you are today. What are the other white spaces that you are looking at? 3 of them, if you'd like to tell us.
So for us as a company, I think all of it starts with consumers. Yes. And trying to understand what is it that they're looking for.
So what is it that consumers are looking which you haven't, which you don't have?
So I think what consumers were looking for is what we have serviced so them far with the 6 brand portfolio that we have. And for us, it's all about that. It's about understanding their needs.
But are there any white spaces?
There will be. We will continue to look the way we have come up with a Dermaco, which was the first brand to start talking about active ingredients in the Indian market, serving it directly to the consumers. The way we brought Aqualogica, deep hydration-based brand, understanding your weather, your skin, understanding India and Indian people and Indian cultural nuances through that as well. Similarly, I think we will continue to look for those white spaces. We have an extensive consumer listening tool that we have built in-house. It's a technology tool which helps us connect with consumers on a daily basis, ask them the right kind of questions, ask them what is on their mind, what are they looking for, probably get 1,500 to 2,000 answers in just 24 hours.
What are the spaces which you think right now are a no-go for you?
So we genuinely believe beauty and personal care is what we are really good at. And as a corporate, as an organization, we have built strong R&D strengths, innovation strengths, understanding of the consumer's skin, hair, habits. Right? And that's the category that we will continue to build. Right? Our entire focus will be on winning in the beauty and personal care space. Right? Anything outside of that, right, is avoidable at this point of time.
So no F&B. The onion hair oil does not translate into onion chips?
No, not really.
No plan.
Beauty and personal care is the focus area for us.
Perfect. Now let's talk about the most important thing, the valuation. Well, there were a lot of murmurs before the IPO about some obnoxious numbers and all of that. Now everything is there for everyone to see. At the price that you are asking for from investors, the company would be valued a little over 10,000 crores. The revenues that you did last year was 1,500 crores. Presuming we annualize the net profit of the first quarter, you're still asking for 100 times 1 year forward price to earnings. This at a time when the other FMCG companies, which are expensive, trading upwards of 50, 55, at best, the most expensive is 65. What makes you think that, there is value left on the table?
See, firstly, I think the process of valuation and how do you arrive at some of this is a process where we met almost over 100 investors over the last 1.5 months. And through the conversations and the modeling that they have done, is how these numbers get arrived at. And it's not just a picture of your current business, right? But more importantly, a view on how the business will shape in future as well that they have. Right? Now, keeping that in mind, right, our view is the right sort of comparisons, etc., for this company at this point of time, because it's not at a stable profitability profile. Right? It's still improving, right? And it's a faster growing company relative to the peers that you're talking about. Right? And hence, some of those metrics might not be the right comparisons. Right? EV by gross margins or EV by revenues might be better comparisons to look at. Right? And if you look at those comparisons, we'd actually be at a discount to the peers that you're referring to. Right? And over time, that would of course continue.
EV by revenue growth, yes, you are comparable. Yes. EV by gross margins, like you said, because 71% gross margins, but the minute it goes to EV by EBITDA or price to earnings,
that's a capital allocation choice, right?
Yes.
That's a capital allocation choice to drive better growth, right? And that's what we are choosing to sort of invest in to grow faster.
So as per you, there is value left on the table. Is that what you'd say?
See, I would just say that we're still 7 years young. We're just getting started. I think for the both of us, we are in this for the longer term, right? We are so excited about the opportunity that we see, about the growth of the company, about what we are doing, the consumer love that we are getting, that this is just a part of the process. I think we should look at the bigger picture. We should look at what this company will achieve in future and just focus on that.
We will do that. I mean, just parting thoughts. You all started at a time where D2C was just about growing. Thereafter, there was this massive growth because of COVID. There was also a massive entry of people coming in. Valuations were surging. Now there's been a bit of a lull. There has been a funding winter, so to say. People are normalizing their habits in terms of consumption online and offline. This journey, what has this taught you about business, life, and valuations in general?
I would say what it has taught me is, one, the power of dreaming, and with the right kind of focus, achieving big is how I would like to summarize what we have done as a set of middle-class parents who just decided to dream and execute, and with the right kind of focus just achieve that. And for me, it is a journey of doing what you love. And if you really are into what you're building, everything else, I think, is just a part of the process. The metrics, we are still evolving. All of that will continue to happen. But if the intent is right, if the past growth says something about us as people, and we have so many people who have associated with us, beautiful partners who have helped us in this journey, they would also say something about our ethics and our way of doing business, right? I just feel that that's the core, and that's what we are going to take forward from here.
Varun, Ghazal, it's been an incredible journey. Congratulations, and thank you very much for speaking with CNBC TV 18.
Thank you so much for having us.
Thank you.
Thank you.